Hello amazing forex traders, welcome once again to this amazing YouTube channel. So if you haven't clicked that bell icon, click the bell icon so that whenever I send a video, you'll be the first to get notified on each video and each content I post on YouTube. You get me? And if you haven't subscribed, what are you waiting for? Click it, subscribe. So today we're going to be, because if you haven't subscribed or you haven't clicked that bell icon, you are missing a lot. I said what? You are missing a lot. So today what are we going to be doing on this channel? I'm going to be teaching you everything I know about Fibonacci. What did I say? Fibonacci. So what is Fibonacci? Most people always suffer about Fibonacci, how to draw Fibonacci, how to set your Fibonacci, blah blah blah, who went up, who went down. But today I'm going to make everything look nice. Most mentor, what do? They try to hide some left and right about Fibonacci and this and that. Why most mentor, they don't hide it. They tell you, but the problem is from you. Yes, I said you. The problem is from you. Why? Because you don't know the criteria that have to be met before using Fibonacci. Now, what are those criteria that have to be met before using Fibonacci? You need to know the direction of the market. You need to know top-down analysis. Boom! Top-down analysis. So, if you don't know top-down analysis, I have many videos on my YouTube channel because I'm a top-down analyst. I'm a what? Top-down analyst. To any content I post, I do top-down analysis. But very soon I'm going to be posting a video just mainly for top-down analysis. And to any content I post on my YouTube channel, I don't hide anything. Yeah, I said it. I don't hide anything. Everything I do is how I trade. So if you like my style of trading and you want to trade like the way I trade, there is my link on the bio there. You can click it and I will respond to your message. So let's first of all go to the chart. No, what are we going to do? Let's go to a clean chart before I go back to the charts and start using clean charts and past data to show you how Fibonacci works. But here, this is going to be a basic class of how Fibonacci works. Now, what is Fibonacci? Fibonacci is a tool. I said it. It's a tool, not an indicator. It's a tool. It's a tool in this forex chart that helps you know where market will reach before market will continue its move. Remember I said that you have to know top-down analysis. That is one. You have to know the direction of market. If market is bullish or bearish, if market is ranging, you can't use Fibonacci for it. Yes, I said it. So let's use this clean chart to show you what market is doing. Let's assume that market is currently bullish at the moment. Yeah, though my chart, the way I draw it may not be fine, but do not laugh. It's part of life. Now let's go to continue. Now, if market is bullish, for example, something like this, you get continue creating higher highs, higher lows, higher highs, higher lows. Now, at this point now, how do you know where market will reach before continue its move? Do you get? How do you know? That's where Fibonacci comes in place. Fibonacci comes in play. Now, first of all, you don't just use your Fibonacci anyhow. You must first of all identify the trend. Yes, I said it. You must first of all identify the what? The trend. And looking at this trend, you know that it is what? It is bullish. This is a bullish trend. Yes, it is bullish. It is looking very bullish. So once you have identified the trend of the market, that's where you come and use your Fibonacci. Now, where do you get your Fibonacci? You get your Fibonacci at the tool parts. The tool parts are my favorite place. You come to tools, trend line, Fibonacci, Gann, and Fibonacci. You come to that place there. You see Fib retracement. You see trend-based Fib extension, Fib channel, blah 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 blah. All this now have to do related with Fibonacci. You get me? But the main thing we use here is Fibonacci. Just this one that you're seeing start here, asterisk. That's what I use. So how do? You come to the Fibonacci there. Fibonacci. You come to the Fibonacci. What do? You come here. I'm going to be showing you my settings and how I use it because I want to show you in depth everything I know about Fibonacci. Everything I know about Fibonacci. Like before I start, you can see that market is bullish. It's creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Now it wants to create a higher low. But where will you know market will reach before what? Continuation. So that's where Fibonacci comes in play. Now, this is my Fibonacci here, and this is the color of my Fibonacci. As you can see, this is the color of my Fibonacci, but you can make it any color that you want. So I'm going to be showing you my readings of my Fibonacci free of charge. Free of charge. Free of charge. So let's continue. So showing my Fibonacci readings, going to the style, you see level line, I make it thick. Trend line, that is the middle line, this dot line that you are seeing here, this line that is straight like this, you get me? This line that is like this, let me show you. This line that you are seeing like this, at this point like this, is the trend line there, you get me? I made it that way, you get? Then extended line, I made it don't extend, do you get me? If you extend it to extend left, you see how it has extended left. So that's the reason why I don't want to make it, let it be extended, let it extend to that left side. So I will unclick it. Now you can see that part of 0, I made it black. That part that is ticked, any part that is ticked, that's my Fibonacci reading, you get me? 0.61, that is the 60 fib retracement level, you get me? And 0.5, that is the 50 retracement level. I use only the 60 retracement level and the 50 retracement level. That is the golden ratio. That is the points that I do use, and that point you always see me at any time when analyzing the market. I use it. That's if I'm analyzing market and I use Fibonacci, you always see me use that level. Now then this minus 0.27 retracement level. This minus 0.27 retracement level, initially you won't see it like that. Initially you will see, in a default way you will see it like that. You will just see it somehow, but you know how to click it. So that's the reading, you get me? So these are only the ones you have to tick. The rest, untick them. Now you can see, you could continue seeing background. I don't have a background on it. Reverse, I don't want it. Price, I don't want it. Level ticked. Look at what I use, values. Do you see? Then what next? Font size, you get me? Text, you see this label is right. That is this level of the number, that 50 fib retracement level, 60 fib retracement level. The labels, I made it right. Middle, do you get me? They are the right at the middle, not top. If you see it very well, you see it here. If you see that they are the middle of the line, not top, on top of the line, on bottom of the line. Do you get me? So that is what that one mean. Then the font size, I made it 12, so you can make it anyhow you want, but these are my Fibonacci readings. Please take a look at it, and that is all about my Fibonacci reading. So I'm going to be taking it out now and coming back to the explanation of this. Now, using your Fibonacci fib retracement level, you have to know what they call swing high and swing low. Swing high and swing low. When market created a impulsive move, it will always make a retracement. To any impulsive move, there must be a retracement or a consolidation, depending. Do you get me? Now we have a impulsive move. We're going to be, if the direction of the market is bullish, we're going to be coming to the swing low and dragging it to the swing high. Do you get me? We're not just going to drag it to the point where market, that is, if market have not started to show weak rejection that it want to start coming back down. We are not just going to come and put it there, because market is still trying to form. It has not yet finished forming. Do you get? So we are going to wait for this market to extend more higher before we can think of dragging our Fibonacci to the top. So when the market comes to at least this point, then we can start doing weak rejection, something like this. Let me show you something like this, and start showing weak rejection, something like this, that is about to retest. Do you get me? That's about to retest. That's where we can come and drag our Fibonacci from here to this point. Do you get me? So once we have dragged it to this point, we are going to come with a support or resistance level. This is a resistance level that will turn to support. Do you get me? So we are going to drag it there. Are you seeing? So since a Fibonacci, the 50 pip and the 0.5 retracement level, that's the 50 retracement level, and the 60 retracement level intersect together with a resistance or support zone, that point will be our area of interest. Will be our point of interest. That's where we are going to be looking at it. We are going to be looking at it, observing it, like all this type of like an investigator. Do you know that all those investigators on all those kind of series movies, blah blah blah, how they usually investigate issues and how do they resolve it, this and that, finding criminals, this and that. So we're going to be we're going to take a look at this thing now. We have drawn our Fibonacci from swing low to swing high, and the Fibonacci, the 50 fib retracement level and the 60 fib retracement level also intersect together with a support level. Now, since that intersect with a support level, we are going to look for any confluences, additional confluences. Though this confluence is enough, this confluence is enough because that is where the 50 fib retracement level all intersects. Do you get me? So we're going to look for additional confluence, such as, let me say, trend line confluence. Do you get me? We're going to be looking for trend line confluence. Let's see if the trend line confluence also corresponds together with the 50 fib. Now we can see that the trend line also intersects together with the 50 fib. Do you get me? Showing that this side is a high value, is a high point of interest, showing that that's where institutions, the big banks, the hedge funds will be taking their trade. So I'm showing you how to use Fibonacci. Please take notes. Take notes. Now, price, that is market, may come to this place. Traders that don't like using Fibonacci, most like using lower time frame retracement levels, this and that, may like see market may start going back up and they'll be like, oh, market has started to change, it started to go. They may take trade at this point here. Then later on, the institutional traders will take them out, hitting their stop loss. Then the retail traders will be like, market has hit my stop loss and went back to my direction. That is what they call market manipulation. Do you get me? Because the big banks are saying this point of high value of interest, so they are going to take trade at that side. They are going to be longing it at this point here. Did you get me? Do you get me? So this is how to use your Fibonacci retracement level. Even though you don't see a trend line attached to it, once the Fibonacci intersects together with the 50 fib or 60 fib retracement level, just know that it will hold. Only what you'll be looking for is entry pattern, how to take advantage of that. But I will advise you, do not buy or sell on a zone. Do not just because you saw that market is going to reach here, this place is a high point of interest to the institutional traders is going to be taking trade there. That's why you now come here and put your pending order here and stop loss here, and you say that first take profit at least this point here, making it 1 to 3 risk to reward. Then you now say maybe the next point will be next key level, you now say 1 to 7 risk to reward. No, you'll be likely faked out again before going back up. I'm speaking out of my experience. I'll be honest, I have 2 years trading experience, so I know what and how these bad guys do. You get me? So what are we going to be doing? This is what we are going to all be looking for. While talking about the other aspect of it, it's also the same thing. The inverse scale is also the same thing. We are going to be looking for it like this, then dragging our Fibonacci to this point here, that's talking about the bearish part. To this point, I'm going to be taking trade there. Do you get me? So That is all about it. So right now we are going to be taking trade. I remember I said we are going to also be looking for additional confluences such as trend line, so that it can be bouncing when trend line, support or resistance zone intersect together with Fibonacci. That is a high level of interest. So we are going to be going to the chart to clarify how it works. Now we're going to be taking out all this thing. Okay, I'm going to be taking a screenshot of this. I'm going to be posting it on my Telegram channel. So what are we going to be waiting for now? Let's go directly to the charts and reanalyze everything about this, so you can get a more clearer view on what I've been saying all this while. Now first thing first, remember I said you have to first of all know top-down analysis, identify the direction of the market before you can start applying what? Fibonacci. Do you get me? So we're going to be starting the top-down analysis from the daily time frame now, or I can starting it from the weekly time frame, but I'm a top-down analyst. I start from monthly time frame. Now looking at this chart that is here is explaining what. Now there's a rule that has to guide price action, and it states that to any impulsive move there must always be a consolidation, and to any consolidation there must always be an impulsive move. Now there cannot be an impulsive move, do you get me, then how do they put that? I've forgotten it, but when I remember I will let you know in the next video. Now let's just continue. Now as you can see, the direction of this market is what? Bullish. This is a bullish trend. Looking at it with your eyes, you will know that it's a bullish trend. So going to the daily time frame, you can see that market has created a what? A push to the upside, a pullback. Now I want to continue its trend, respecting the direction of this market. Do you get me? But remember the law of price action. To any impulsive move there must always be a consolidation. Now this is the consolidation we are facing at the moment. This is the consolidation we are facing at the what? At the moment. Now since we saw that this market is bullish, how was I able to take trade on this? Though I saw the market has broken the trend line, I seen, so I was expecting a push to the downside, but I saw that market created a double bottom. Now this is a chart, double bottom, reversal chart pattern are patterns that likely hold. They are 85% sure that they hold once you use them in the right way. Now this is the neckline. As I saw the market broke the neckline of the double bottom on the daily time frame, I now said, okay, this is will be a very nice chance to catch the what? The buy. So how am I going to take and catch the buy? I said, where's my Fibonacci? I brought my Fibonacci. I took it from the swing low to the swing high. Taking it from the swing low to the swing high, what could you see? What can you see? You could see that market went up, pulled back to the what? 50 fib retracement level. As it pulled back to the 50 fib retracement level, also reached the 60 fib retracement level, intersect together with a support level. And that level is also a key level for you to see how powerful that level is. Now, not just that, we also saw multiple retracement multiple retracement on it, reactions, multiple reaction on that point. Now coming here using your 50, your trend line, additional confluence to it, what do you see? You saw that it's also on a trend line. Market came here, retested on it, went back up, created some candlestick patterns, you get me, went up, pulled back to it again and touched that 50, touched that trend line that is here, that also intersect to this. So once when I saw this, I said, yeah, market is going to go for a buy, because this is where institutional traders is going to be looking for buys. So and I said, okay, I'm going to be going to my 4-hour time frame looking for possible opportunities. Now did you see how I'm using it? This is how everything is intersecting. This is how everything is moving hand in hand. So and I said, okay, I'm going to be using I don't use candlestick patterns to enter my trade. I'll be very honest. I use CTL break, the break of the CTL. You get me? So I used CTL break. So this is how I entered my trade. You get me? This is how I entered my trade. I was waiting for a breakout of this trade. So I saw a break and I was waiting for a retest continuation. So this was like a retest continuation. So I took my trade at this point here. That was what I took here, aggressive entry. But I was like, okay, if market should break this place, I will be very, very sure that this trade is going to be going for a buy without doubt. Without a doubt. Without any doubt. Without any doubt. So I saw market broke that without this thing. So I don't always trade doing all these kind of things that people be like, if market do this, if market do this. I come here to analyze trade with step by step. So when I want to click that button, I will not be doing a guesswork. I will not be saying, oh, blah blah blah, please help me, let this thing be this. Though you have to pray, but you have to be sure in yourself. Do you get me? So I took this trade from here, and that was like a 1 to 3 risk to reward ratio long. I longed this thing from here. My stop loss was here. Fixed take profit here. So okay, this was 1 to 2 risk to reward ratio. That was 1 to 2 risk to reward ratio. Though I was putting this place under consideration. Because it was the upper trend line. So when market came here, I was doing some reaction. I carried my stop loss from that side there to this point here, making my risks to be risk free, so that in case anyhow market does, when they remove me out, I know my account is supposed to be guarded with, like, my life depends on it. Do you get me? So at this point now, I'm risk free. So when market was reacting here, I took another trade at this point here. Like I came here, drag another what you call it, because this was a range breakout. It will break, then retest continuation. So I took another point here, put my pending order here. Market came here, hit my pending order, took me out. Like continue and gave me this. So only on this here, I entered 3 good positions. One here with a smaller lot size, one here with a bigger lot size, another one here again with a smaller lot size. You get me? And all risks were transferred. Making it risk free. So this is how I do my top down analysis using Fibonacci. So we're going to be going to another pair on this. I'm expecting this. I'm already in the trade on this pair already, starting from here, because I will see a break out of here, double bottom, a break with an engulfing candle, retest back on it with another engulfing candle. So I know that there's no how this will not go. But I entered here with one position, low and small lot size, using a what they call it, because this is not my entry pattern. You get me? Stop loss here. You get me? So when market create a break retest, I'm going to go into the 1 hour to check for that bad boy, because I don't know what's going on here, so I can re-enter again with a very nice position, because I'm only in one position here and I'm not okay by it. I need a solid confirmation. Next take profit will be this side here, will be that point there. You get me? So let's go to another chart, another pair, to look for possible Fibonacci this thing. So let's go to the DXY. I think the DXY, all pairs respect Fibonacci. Depends on how you do your top down analysis. So excuse me please, on the weekly time frame, I could see the market is currently reacting on a what, third touch of the market. It was reacting on the third touch of the market, blah 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 blah. That's not what concerns me here. I want to show you Fibonacci. I'm not, if you're interested in the top down analysis, you watch other of my videos, or if you want a more clearer knowledge on Fibonacci, you can chat me up. My Telegram channel, my Telegram group, my Telegram link is there. So how was I able to catch the buy of this trade? If you check my YouTube channel, you will see it. The video is there. I caught the buy of this trade from here. This point here, my position was here to this point here. Very sharp and smooth. And I now caught again from here to here. You get me? So in this trade here, I entered position like two good positions, making soft money. So how was it? First of all, I realized the direction of the market, that this thing created a double bottom on the weekly time frame together with a third touch, and I was like, okay, that is good to go. So how will I enter? I came to the daily time frame and I drew my support zone, and I used it plus Fibonacci, from swing low to swing high. You have to know structure. You can't run away from this structure without structure. So what did you see? Market came here, came to the 50 pip retracement level, and what, respected it together with the support zone. So that point there was my point of interest. So calculating the Fibonacci, this is an A to B to C to D retracement level, and you saw market came to the D retracement level and react on that D retracement level. It left a week at the points there, a week at that point there. Are you seeing me? So not just that, I want to show you another Fibonacci retracement level only on this pair. Let's see how nice and massive this. Okay, I didn't just enter two position on this, I entered 3 position on this. So looking at this from here, okay, not from there, from the other downside there, from here to this downside here, you see, also intersect together with a support zone. This is the support. This is also the Fibonacci 50 pip 60 pip treatment level intersected there. So as intersect that point there, and I said, okay, what am I going to do? I saw a trend line there. I was like, okay, that is a trend line. That means market is going to react on that point there. So I took out my Fibonacci, coming back to the daily time, to the 4-hour time frame for my entry. Then I used CTL break. Everything is explained on my channel there. You will see how I took this trade there. Everything used with Fibonacci. So that's how power of Fibonacci works. That's how the power of Fibonacci is. You get, Fibonacci is very powerful. Now this trade, now I'm expecting a further push to the downside on DXY and Euro USD. Euro USD, I'm expecting a further push to the upside. Now DXY is looking at this zone, next target this zone 96.642, next target on DXY. So what am I expecting on DXY? I'm expecting a further push to the downside, then a pullback to that neckline of the double top, something like this, a push to the upside, a retest. I'm coming, please. I don't know why my phone is somehow lagging at the moment. A retest, a matured retest, then a continuation to this point. That's what I'm expecting, to re-enter a very nice position. Though I entered this trade very early at that point there. That's point where you are saying what do you call it? At that point there. So as I was saying, so this is what I'm going to be expecting on DXY. I'm going to be expecting a push to the downside, a further push to the downside on a daily time frame before it will now retest on that zone. So when it retests, I'm going to be expecting this to retest on that neckline using Fibonacci. This is how it aligned. So at this point here, that's why I'm going to be looking at it to come. at this point here. That's how I'm going to be looking at it to come. First of all, it has to push to this side here. Push at least to this side. At least to that side. Pull back to the neckline there and drop to that side. But if it does not do that, I'm still in a good position on the 4-hour time frame. So let me clear out this thing, because this place is looking like it's looking nasty at the moment, and I don't like my chart looking rough. So going to the 4-hour time frame, let me show you how I entered this on my previous video on YouTube channel. On my YouTube channel, I showed you how I entered it. Now I said once market broke out, this is a break retest continuation. As I saw it, I said okay, this will be the neckline. Market is going to retest back on it, and market retested back on it, not just once, severally. Retested back on it. First target, I told you that first target will be the neckline, and once if market could be able to break the neckline, then we are going to be looking further push to the what, to the downside, at least this next zone. I told you, and I was like, I meant it a lot. So what do you see? Market what came back to this next zone. I closed all my positions at that point because I was waiting for market to break the neckline, but market did not. It hit my first TP, and I said I'm okay by it. Now what the market did, came here and hit my SL, like came back to my entering part, and I was like okay, how am I going to enter this trade again? I said I'm going to be entering this trade with I'm going to enter this trade using Fibonacci and what I taught you. So let me show you how I entered this trade. So how was I able to enter this trade? I came here because I knew the direction of the market. So I came here, I took my trend line, at least 2 touches. I took my trend line from here to here, and I found out that it also intersected together with a support, with a resistance zone. So as I saw the resistance zone, I was like, okay, let me use my Fibonacci. If Fibonacci can align together with this accurately, then I'll be taking trade from that point there. Now, what do you see? Fibonacci intersect together with all these criteria I let you know. All these criteria. So after I saw this, I said, wow. I'm going to screen to the lower time frame that I don't like entering, but I'm going to be like very conservative, because I don't want anything that will make my heart to be beating faster. So I went to the 1-hour time frame to look at this, to look at it very well, because that is looking very not nice. So what did I do? I saw it here, 50 fib retracement level, Fibonacci. Remember, we are following the trend to know the direction of the market. Structure matters a lot. So what did I see in this part here? I could see market came to this point here. That's why I said do not enter. Just put your pending order here, because there are many people that will just say, okay, since they have seen the direction of the market, they are going to be shorting this, putting their pending order here, then stop loss at this point here. They want to make their stop loss because they have become Spider-Man. They take profit here. And now this, they will say, wow, this is 1 to 16 risk to reward ratio. Very massive. Me, I don't care about the 1 to 6 risk to reward ratio. I care about how quality that trade is. Are you getting me? So therefore, how was I able to take this trade? I said, okay, market came here, reacted on it, 1, came back, reacted on it, 2. You get me? Came back again, reacted on it, creating a double top. As it created a double top, I said, wow, this look nice. I'm going to be entering this with a CTL break. So I now drag my CTL from here to this point here, and I was like, okay, because I do put measures in place to safeguard my money. My money is very important in this. So I put this place here, and I was like, if market could succeed and break out from this point here, I'm going to be taking my trade. Dragging it to that next zone, because I'm going to be swing trading this. So when I saw this, I entered short position, entered my position at this point here. Stop loss here, then I now entered another one again at this point here, short position at the neckline here. So that one was not triggered at all. So one position on that point there till that side there. So this was how I caught this trade. That is 1 to 12 risk to reward ratio, and I'm still in profit. Though I have transferred my risk from this point here to this point here. So like this now, as I'm talking to you, I am risk free. So this, like this, I'm going to be swing trading this. This is going to be a 1 to 12 risk to reward. So that's what I'm seeing on DXY. Are you seeing how I'm breaking this down using Fibonacci? So this is how I trade every time when analyzing the market. This is how I trade. I don't like hiding anything from my viewers. That is the reason why this channel is called CJFX. So please, if you like the content, please make sure you do subscribe. And not just subscribe, always click the bell icon so that anytime I post a video, you'll be the first to get notified. So thank you very much for liking this, and make sure you do subscribe, and have a nice day.